Hello, and wow, what a 12 months and counting it's been for AI so far. We've gone from it's going to run the planet to it's going to ruin the populace, and now we're swinging somewhere in between. Welcome to Tech Tuesdays, where we take an alternative lens on market dynamics, and that means AI. That hype cycle has been extraordinary. And it's also been pretty exhausting. And if you've been following the VC landscape, you'll have seen investors going on the same kind of roller coaster. And they've been swinging between everything from throwing money at anything with a transformer in the pitch deck to then all of a sudden asking very pointed questions about defensibility and margins and whether anyone truly has a product. So the fair question is, what signals are VCs actually looking for now? So I helped build and exit a AI startup back right in the middle of COVID. But that was in the pre-AI era, that was pre-GPT-4, and it was pre-LLMs going from research paper subjects to core parts of pitch decks. And the landscape has really radically shifted just even recent times. The playbook from just a couple of years ago, which was standard, is now pretty much a relic of a bygone era. So I'm Niladri Roy. I've spent about the last decade in energy and climate tech, in customer and investor facing roles. And I'm joined today by two seasoned professionals, one a founder and one a CTO. And they've been much closer to the technical coalface, and they've sat on both sides of that table. They have raised capital, they have built the tech, done DD, and then also had to fix lots of the problems along the way. So why don't you start by introducing yourselves briefly?
Yeah, so my name's Niall. I'm probably a three-time founder. I'm currently using AI to build a leadership coaching application. My background is primarily in media, technology, building out programs, probably the biggest thing being the 2012 Olympics. So I'm finding AI to be a massive change in technology delivery. It's just transformed the landscape.
Thank you. And Jamil?
I'm a career CTO. I've been working in the financial services sector for quite some time, delivering large transformation change solutions from retail to corporate banking, and also leading various teams and different engagements on software engineering, which is going through a massive change as well. The actual software engineering discipline as such. So yeah, it's very relevant and very exciting times.
All right, thank you both. So actually, Jamil, I'll stick with you for the first one. And first thought is that, especially now, are VCs really evaluating the tech, or is it really the confidence in the team and especially in the technical team and the CTO? Because, and I can say from experience, many of the good VCs will hire their own due diligence advisors because they can't be expected to know all the details. But I'd just open up to get your thoughts on that.
I think it does depend on the VC. The market and the maturity of a VC would have different kind of capabilities and strengths. They definitely invest in people. It's the people who've got the idea and the execution, and they got to believe in the team being able to deliver what they are selling. But it does depend on what is the actual proposition. I think if the proposition is real deep tech, you're really investing in the people because that's where the brains and the innovation is. If the idea is a combination of a tech, business, disruption of a specific space, I think there's a much more sort of waiting on the actual people themselves. Can they execute delivery? Can they actually execute go to market? Can they actually grow the business? So I think it does depend on various areas. However, with today, and the crazy amount of money that's gone to anything that's called AI, and people are learning from experience, is that you dig in with due diligence in terms of exactly where the IP is. That's where the differentiator is, and that's where the VCs will be looking to spread the risk or their weighting behind it.
Yeah, thank you. And Niall, want to chime in?
Yeah, I would agree mostly with Jamil there. I think. Well, I know for a fact that VCs are looking at the team, that they're investing in the team, they're not investing in your code. particularly if you're an early stage startup, they expect you to pivot. So what they're doing is investing in the team itself, the ability to actually deliver. So yeah, if you haven't got a team, and they won't invest in a single founder either, it's a team. It's built around founder, marketing, technology, etc. AI probably affects that to some extent because you won't have a dev team. A lot of startups these days will really have a CTO who will also be the dev team because AI is doing all the work. So there may be some changes there, but essentially, if they don't trust the team, they're not going to put their money in the business.
Yeah, you're right. If you look at what's happened in just with Meta, and okay, they've gone a little bit extreme there, but they basically were, poaching and hiring left, right, and center with offers out of this world. That just tells us again, it's about the people, right? But that's at a different spectrum. They're more on the frontier side of AI, right? So that's where the specialist PhD, the researchers, and so on. It's really investing in the people and the people who are either going to be delivering it or breaking into that market, and both are difficult challenges. They're not easy.
You have to trust them to deliver growth. Well, VC wants to see growth essentially. So if they don't trust the team to deliver growth, doesn't matter what product they have, they're not going to invest in it.
And I'll add one more thought to that because it strikes me that now more than ever, and especially on that point about teams are more lean and there's more AI in the mix, the CTO's ability to hold the room and really be able to translate some of that technical complexity into easy speak for the VCs is more important now than ever. So complexity is going up, but the need to clearly articulate is ramping up equally as well. So, all right, thanks, gents. If we now move on to our second point, which I think flows on from there, which is about technical debt and DD. And again, given the complexity of how the space is moving, it tends to be a question that still isn't answered very well. And there's a question mark about that balance between raising capital, how much to show, how much is it revealed versus what is okay to keep in the background. So I would like to get your thoughts on that. So let's start with Niall this time.
Well, unpack debt is part and parcel of software delivery, and it's only a problem if the founder can't explain what they're going to do with it and how they're going to manage it. If the VC doesn't believe you can deliver your tech debt, they're not going to invest in you. And as it goes back to the first point, if you don't have faith in you, they're not going to put an investment in. So tech debt, if you hide it, they will find it, and you won't get the investment. It's as simple as that.
And it starts to rear its ugly head when you're growing so fast, right? So if you're putting money in today, 6 months down the line, you're moving at crazy velocity into the market. And then ideas come along saying, why don't we add this? And why don't we add that? And then when the answers start to come back saying, to add this, I need this much, but then logically, it shouldn't take that long. And therefore, you must have debt. I think it's important that to be recognized, to be measured, and then to make sure it's transparently listed and put some sort of timeline to it. It needs 3 days, this needs 5 days, etc. And then we can choose when we do it. Looking at your path in terms of your strategy of product features, you look at your debt, and some of those debts are fluffy, not so critical. You can put those aside, but anything fundamental, like how you authenticate, for example, that might impact the whole system, you might have to give it different priority. So I think measure it, put something behind it in terms of timeline, and make sure it's clear to people. They are aware that it's there, and so on. It's normal, it's part of the business, and we take it from there.
I mean, if you're an early stage startup, your tech debt shouldn't be that big anyway. And so it shouldn't be a massive issue. If you've got an early stage startup and you've got a huge pile of debt behind you, there's a real problem there anyway.
Yeah, it happens even in startups. If you've got, say, at the beginning of your journey in the first, say, 6 months or a year, that you have a bit of a turnover of software engineering stuff, right? There's always that somebody comes in and I can't work with this code. It's not clear to me. I'll just rewrite it again and again. That kind of stuff happens, or they don't agree. They didn't think of the overall picture of this API is going to be different, and it shouldn't be 17 different APIs, which is where we are today. It should be one API that does that. So it does manifest in different ways. I think it's important that it's clear it's measured, it's a timeline put onto it, and don't hide it. Why hide it?
Yeah, well, absolutely.
Everyone's going to have technical debt, right? Forget software engineering. You're going to build a Formula One car, right? You're going to have a different wing, right? So you're going to do the first time, you're going to do a few laps. They're going to invest in that, but they know that the wing needs to be a bit tweaked, the suspension needs to be changed, and whatever. That's iterative, and it's kind of understood. At least mature VCs and mature founders would find a way around it.
I mean, the expectation is that what you show them is MVP or thereabouts. And so you're going to be building a lot more features. So, I mean, if you do have a lot of debt already, they're going to want to know how you're going to manage that debt. You can't hide it.
It'll come and bite you. And at the end of the day, if you did end up admitting later on, then you might also be in breach of all sorts of things, contracts, et cetera, right? So that's why just make it clear, have it listed, that you know about it, everyone is behind it, and we'll decide when to give it a priority as and when. I think that's probably the safest option for everyone to be playing in. That's my opinion anyway.
And as I've heard it described, which I thought was quite fun, every CTO knows exactly where the bodies are buried, right? But the point now is how to have a clear remediation path. So as long as there's an explanation sitting behind it and it sounds credible enough, then it's okay. All right. Thank you. And now also flowing from there, and I really like this one because I think it's really reflective of where we are in the new AI age. So the traditional headcount to output metric that VCs use so much has been completely flipped on its head because you've got very capable engineers running multiple agents and doing all sorts of clever, nifty things. So it's become a more important signal than ever. But my question is actually, is it being answered well given all of the capabilities available? So I'll give that one to you, Jamil, to begin with.
It's a balance. I think for people to come up with statements of panacea, one super engineer and 6-7 agents will churn out, and that's all I need, and so on, is a bit of a fallacy, really. So you kind of need to have redundancy built into your organization, your delivery organization. You do need to have the tools and the software engineer so finely integrated so that they can do a lot of more in their time, so their productivity increases significantly. And that's what you need to see, but you need to see it in a balanced way. I think that if we just look at the press at the moment, there's a bit of noise about Oracle dropping X number of people, Jack Dorsey's organization dropping a lot of people. I think AI unfortunately is being used as an excuse, but actually it's not. I think it's more to do with past inefficiency in the last sort of 2 years where they hired way too much too fast for what they needed. If we go back to what a VC and an investment opportunity looks like, I think they do want to look at, are your engineers outputting X amount of efficiency? I think we'll come up with a ratio of what efficiency looks like in terms of product delivery. But I just think it is fair point to look at the cost of your organization. Your biggest cost of the organization is, depending on the organization, is either people or the marketing budget. Is those two mainly, right? And a lot of stuff doesn't need as much marketing anymore, and you don't need a team of 500-600 software engineers to do what they did back then. I mean, that alone creates inefficiency. There's no way, as a CTO who's managed, maximum I manage is 300 people, and the last opportunity I was working on was 120 people, and the average tends to be about 50 people. But to manage 300 people, there's no way you'd know exactly what everyone's doing and the efficiency you're getting, even though you've got divisional heads. So the more people you have, the more efficiency you bring into the formula. That's normal. And I think if we look at rationalizing and focusing on how the tools can accelerate, my 300 people could be retained, but I can expand my delivery so much more, or I can use those people in different aspects of the business. So I think there's different ways of looking at it. There's definitely a lot more enhancements that we can do with the AI tools. It will raise the question, why do we need X number of people to do X job? right? As a software engineer, I know what authentication would need in terms of time, in terms of the people. I would know the business logic, what it needs. I would know roughly how long will it take to train an AI with, let's just say general business data rather than very specific market movement data or sentiments and stuff like that. I have a notional idea of the resources as people and time. So I think if I was to invest, I would definitely ask those kind of questions.
I mean, I think that it's moved so fast now, and the AI is so capable now that I think if a VC is coming in now, they probably expect you to have just one developer or CTO who's built a product. When I've literally just built a relatively sophisticated application with multiple APIs, an MCP layer, etc., etc. I'm not a coder at all. I'd be treating that as an MVP, and I'd be looking to go out at this point, look for investment, look for customers. But the next phases, the next features coming in, I'd be looking to bring in senior developers who can work with agents to keep on building out. So I think a VC will be looking to understand how you're going to build your team out. So the probably expectation is you arrive at their doorstep with no one apart from your CTO, and then they want to see what the plan is to build out from there. How are you going to build your senior devs? How are you going to build your agents? What environments you're going to put it into, etc. And currently, I'm just using Replit. It's very simple for me. But once you get the code base there, making adds and changes to it, that's where the problems start. That's when you start losing data, when you start getting your spaghetti string, stuff. It's just it's a bit of a worry, especially if you don't understand the code. You don't know what's going on in the background.
It does depend on what the proposition is, right? So if the proposition has a lot more integration with many third parties, and then there is business rules with each of those business parties and so on, it starts to get a bit more complex. So I would start to break it down into different disciplines, sort of like the data and the plumbing side of it, let's just call it that. And then the visual aspect and the interaction with the human is another aspect. So you could grow a team, but you don't need to go a huge, right? To give you an example, going back in time, I took Linux and I needed to fit it into 1 megabyte, right? So it was just me and two other software engineers over a 6-week period that we were able to do that. This was back in the late 90s, right? So we didn't have the AI tools. So having that focus, that determination, and obviously understanding what you want to do. And then when we grew, it just took us longer to do anything, right? As we got more processes, the databases, we just used MySQL, and we went to DB2 for IBM, and it was much more industrial. But to do anything there, you had to do lots of steps. So I just think it does depend on where you're going. But I think certainly you can have an elite team of people who have very specific areas of expertise with a CTO on top, who basically can help orchestrate that organization deliver its objective, but also has a foot to be basically your right-hand man or right-hand woman, for example, to be able to run the business, who understands the business, who understands the changes here and the impact on the business itself. So I think the VC space also appreciate a CTO who is not just strong on the technical side of things, but also is part of when you say part of the executive team, it doesn't mean they just have a seat on that table, right? They are as accountable to every single aspect of it. And I think that's where sophistication from a VC would actually recognize that as a potential model, right? I'm sure we're going to get the McKenzies and so on who will come up with the new Tom, the target operating models for what a startup would look like with a new digital supporting element. So it'd be fun to see when that comes out.
But at the end of the day, VC wants to see scale. So if you have the team in place to scale, doesn't matter how big it is, that's what they want to see.
Cool.
Yeah, and I would say from the VC perspective, because I've seen a bit of this where, again, the idea that agents are a panacea, and so on the surface of things, a larger headcount could be seen as could raise a question, raise a flag, but really in terms of what we've talked about here is, as long as there's some substantive argumentation underneath, right, okay, this is what the productivity increase will be, then it stacks up. So it's not really a question of how many heads. It's okay, what is the output that that volume of heads is enabling, and being able to articulate that. All right. Thanks. And now moving on to our final point, and this one's a bit more specific, but those on that. Okay, so we've talked a bit about how much technical understanding there'll be at the VC, and if we go a layer down from that, the architecture diagram, it could look great, it could look really detailed, but on that investor meeting, someone's looking at it who doesn't understand it, being charitable, probably. So the challenge then becomes, how does that translate into cost modeling? And there's that real fine balance between technical and financial credibility, and then how being able to express that. So actually, Niall might even be something that's very pertinent to you at this time. So I'll throw that over to you.
I think architecture only really matters to VC if it translates into scalability and reliability. I mean, they'll have their own resources in-house to check, so there will be some knowledge there. They'll probably bring someone in, but maybe for that first meeting, they'll have a basic understanding of it. But at the end of the day, like I say, it's all about scalability. Can it scale? If the architecture looks like it can scale, they're happy with it. It's that simple. Don't have that much to say on it.
Look, architectural diagrams or the blueprints are key. I think what the biggest challenge is, I tend to find, is that a lot of it is actually not there, right? We talk about architectural diagrams or architecture and so on. A lot of people talk about it, and it's actually not there. And if it's there, it's too high level, and nobody's really taking full ownership of it and accountability for it. So that's kind of the important element. I think if I was an investor, I want to make sure that A, it's there, it's sufficiently enriched or detailed enough so that any software engineer, hosting architect can actually look at it and say, okay, I know what you need. And there is a bit of governance. So if you've got 6 engineers, they don't just go and change it, which has material impact onto the architecture. So I'd like to see they've got some sort of governance. So if we're going to change something, somebody goes back to that blueprint and changes it, right? So I think those are the 2 key elements, is that, is it there? Is it detailed and sufficiently sophisticated enough for our needs? And B, do we have a bit of governance so that any changes, amendments, updates are reflected in a reasonable amount of time, so that what I'm looking at is not too far behind to where we are today. So those are the kind of 2 things. If I was a VC and I was doing a due diligence exercise on behalf of a VC, that's what I would be looking for.
I'll add into that just a thought that when we're talking about architecture, and it's not even that new, but in the modern age, like that, cloud costs a scale, it becomes literally cloud. It's this nebulous thing, you throw it into the cloud. And so how to properly model that in and then present that and whatever cost case that's behind that to the VC, I think is an important consideration to have as well.
I think that's quite important for we're using Anthropic, so trying to work out the token usage. I've no idea at the minute. So I've got to actually use it to understand what the token usage will be, because no one can really explain, tokens. A token can be multiple tokens in one word, or it could be one token in one word. But yeah, I will have to see how it goes through usage, that kind of thing. So it's kind of suck it and see in some cases.
Yeah, you haven't had your first bill yet.
Well, we're keeping it low level at the minute. So, but we only released the MVP there last week.
Okay, cool. You'll get the alert of saying, you've run out of tokens, so you're gonna have to wait until X period of time until you can use it again.
We've literally, we've hit that a few times.
Yeah, but it's something that we need to measure, right? I mean, that's during development, right? So we're not talking about what does it look like when you go live, because you're still using that. That's a different part of the LLM, right? So you're running out tokens during development phase, and then you got tokens during usage, and that behavior is still not mapped out, and it's not so clear. So, but you roughly have an idea what you're going to budget behind it, and then obviously the pricing will come out of it. But on a broader scale, your application needs to sit somewhere So how many instances do I need to have on AWS or Azure or whatever the platform that you're going to be using? What's the sort of CPU RAM profile that it needs? Am I going to have it in one location? Am I going to have it in two locations for redundancy and resilience? Am I going to replicate the database? And then you've got ingress and egress networking, which is going to hit obviously your LLM because they don't reside in the same place. So there's a cost of network there. And then you've got a token cost. So I think from a startup point of view and from a VC's perspective is, do we have a good handle on the costs, right? Do we know all the cost components? And that's where the architecture helps. And then from that, the architecture helps because you kind of roughly know I've got 3 nodes on Azure. You know that's a fixed cost, whatever, maybe, I don't know, $50, $60 a month per node, for example. You know your networking is going to be X and your storage is going to increase over time, but it's the lowest cost element of the whole of the hosting aspect. But network will have an impact, and obviously LLM usage for the user experience will have an issue. So it's just good to have a handle. And it's the old adage, right? If you can't measure it, you can't manage it. As simple as that.
Yeah, exactly. What gets measured gets done.
Yeah. What gets measured also get cut as well if it's not needed, right? So it works both ways.
Good stuff. All right. So I would like to throw in a bonus round. So this one is, given the conversation that we've had so far, just any additional new thoughts that have come in, ideas that have come in, just space to throw those out to the space and to the audience. So Niall, I'll start with you.
Nothing new, really. I mean, the key driver I've spoken to a lot of VCs. The key driver for them is scaling and scaling rapidly. If you can do that, if you can show you can do that, then you've got a chance of getting funding. But from my point of view, I'm looking more in the direction of the angels because I want to see some support from their side. Whereas a VC will probably look to there'll be less support coming from a VC. Most VCs anyway. Some I've met that will give you support, but most won't. And like only I think there's very few VC investments that actually make money. So they kind of see you as a line in a spreadsheet, and that's it. So I'm looking towards the angel investor, that kind of area.
Without fudging a term, sounds like we talk about strategic investor. You're looking for a strategic angel.
Yeah, someone who's he wants to see the company grow and be part of the company really, and so give us some support. There's areas that we don't understand, areas of growing the business that we don't understand. We'd like to see some support in that area, not just be told, "Here's your money, go and sort it out."
Yeah, the angel network is also getting a lot more sophisticated. It has been over the years, and the advent of AI and so on. They're asking much more relevant questions nowadays than they did back then. Some of the angel investors actually come from that industry, so it's pretty clear to them where they're going. And then you've got obviously VCs, which are, they're not big on the early stage, for example, is one aspect. So from my point of view, those two are key. I think angel investors will play a big role. I think government support here in the UK could go a long way to enhance that as well. And I'm hoping to see more cost-effective options for us for local hosting, local LLMs, and to basically drive the cost down for our founders ecosystem to be able to grow quite quickly without the full burden of costs behind them as well.
Well, I think SEIS,
to
be honest.
So it's funny you say SEIS. That's exactly the point that I was going to make as well, to say that it's almost flipping the model where the investors that come in at SEIS, which traditionally have been a bit of a punt, sometimes a tax write-off, but now they're having to come in much more savvy, so that understanding is earlier in the process and the chain than it has been historically.
Yeah. And the value they bring becomes earlier on rather than later in the cycle.
All right. Now, Jamil, any potpourri? What thoughts have come up?
I kind of took Niall's and added to them. So, but I just think from a VC's perspective, they want to see fast growth. They want to be able to see feature growth. They don't want to see a one-trick pony. I think there's going to be consolidation in the space, which is, to me, is interesting because, you've got all these propositions. They do, A plus B, and the other one does C and D. If you bring them together, you might actually have a better proposition to the end user and longevity for you as a growth and lock in to some clients. So that is an area that I'm interested in looking at, and obviously that requires a lot of due diligence and investigation on infrastructure, on the quality of the IP and all that kind of stuff. So I think that's going to be interesting in the next 2 years, and I just want to see more AI supported businesses in the tech space here, as in new features using AI to get to market faster or to add feature sets that are incredibly unique using AI.
Okay, good stuff. So unfortunately, we are coming to the end of our time. So thank you both for your contributions. I'll just recap 2 or 3 of the things that I jotted down, which is the ability to explain technical complexity, especially now, and especially the efficiency gains which are there for whatever a team or a tech stack looks like. I thought the token cost yet to be determined was quite a fun one. I think that's a question that is quite hot, especially for a startup. And overall, that there's just a need to be able to demonstrate the ability to rapidly scale, and that gets a lot of focus. So, all right. And if that has been useful to our audience, then please do follow us at Tech Tuesdays. And we will be back with more in the series. But if there are any particular topics that you would like us to dive into and take a bit of that alternative lens on, then drop them in the comments and we will happily get into them. So all that remains is for me to say thank you very much, Niall, and thank you very much, Jamil. And finally, thank you to all of you who've tuned in, and we'll see you again soon.